All right, welcome everyone. So, if you're a non-resident Indian or really any overseas investor with ties to India, you're going to want to pay close attention. We're breaking down the big changes from India's 2026 budget, and trust me, they could have a real impact on your finances. So, let's just dive right in.
If you've got any financial connection to India, we're talking family, property, investments, you name it, this is for you. These new proposals, they're all about one thing, making it way simpler, much smoother, and honestly, a lot more appealing to do business with India. Okay, first up, and this is a really big deal. The government is basically rolling out the red carpet for overseas investors. How? Well, they're seriously upping the limits on how much you can invest in Indian companies. It's like they're offering you a much bigger seat at the table. So, before we get into the really cool numbers, let's get our terms straight. You're going to hear the acronym PROI a lot. That stands for Person Resident Outside India. And it's not just for NRIs, it's a wide net that includes PIOs, foreign nationals, even entire companies based outside of India. Right, so how do these PROIs actually invest in the Indian stock market? Well, the main route is through what's called the Portfolio Investment Scheme. And this scheme, well, it's getting a massive upgrade. Let's do a quick before and after. So before this budget, any single PROI investor, whether that's you as an individual or an overseas company, could only own up to 5% of a listed Indian company. That was the hard cap. And now, boom, that limit has been doubled. It's now 10%. I mean, that is a huge jump. It means you can take a much, much more significant stake in a company's future. And it wasn't just about individuals. There was another limit, a cap on the total investment from all POIs combined in any one company. And that ceiling was also pretty tight, just 10%. So what's the new number? It's been more than doubled, all the way up to 24%. This is a game changer. It really opens the doors for a huge wave of investment to come into the country, especially from the global Indian community. So what's the big picture here? Well, as experts like Sanjay Kumar are pointing out, this is about more than just making it easier for you to invest. The hope is that it will seriously deepen India's capital markets. And, it could even mean India doesn't have to rely as much on those massive institutional foreign portfolio investors. Okay, let's switch gears and talk about real estate. Now, if you've ever tried to buy or sell property involving a non-resident, you know it can be, let's just say, a bit of a nightmare with the paperwork. But good news, a really annoying, long-standing headache is finally being fixed. Here's the problem. There was this old rule that put this totally unnecessary burden on the buyer in India if they were purchasing property from an NRI. It was this one extra step that just gummed up the whole process. We're talking delays, extra paperwork, a real pain for everybody. So here's the fix, and it's so simple. Before, the buyer in India had to apply for a special tax number, a TAN, just for that one deal. Total bureaucratic nightmare. But now, they can just use their regular PAN card. That's it. It makes the whole thing as straightforward as any other local property deal. And the takeaway for you, the non-resident seller, is huge. This one little change just smooths out the entire process. It's a massive relief because it makes the deal faster, way easier, and honestly, a lot less scary for your potential buyers back home. Oh, and a quick heads up, this is important. This fantastic change for property deals officially goes into effect on October 1st of this year, so mark that date. All right, moving on to taxes. And you'll see the same theme here, making things simpler and fairer. The budget is rolling out some key exemptions that are really meant to create a more logical, more consistent tax system for overseas businesses operating in India. We're going to look at two main updates in this section. One is about something called the minimum alternate tax, we'll call it MAT, and the second one is a totally new tax break designed to give a major boost to India's electronics manufacturing industry. So what on earth is MAT? Well, think of it like a tax safety net. It's there to make sure that companies making good profits still pay some minimum amount of tax, even if they have a ton of exemptions and deductions that would otherwise let them pay nothing. It's a tax floor, basically. Okay, so the change here is really about creating a level playing field. For certain businesses, India has this simplified tax system where you just pay tax on a percentage of your revenue. No complicated profit math. Now, some non-resident businesses on this system were already exempt from MAT. This budget just extends that same exemption to everyone else on that system, like cruise ship operators and certain electronic service providers. It's just about being consistent. And this next one, this really shows you what the government is trying to do. They've introduced a brand new tax break for foreign companies that supply capital equipment, machinery, to electronics makers in India. It's a very clear signal. They're making it cheaper and more tax-friendly for foreign partners to come in and help build India's high-tech manufacturing power. Okay, so let's zoom out for a second. When you put all of this together, the higher investment limits, the easier property deals, the fair tax rules, a really clear picture starts to form, especially for the global Indian community.
The message is loud and clear, right? The government is basically saying, we want you to engage with the Indian economy. They're making it simpler, more attractive, and, let's be honest, more profitable for you to be an investor, a property owner, or a business partner in India. And that's really the core of it, isn't it? This isn't just about changing a few rules here and there. It's a real strategic push to cut through the red tape and send a direct invitation to the global Indian community, saying, come be a bigger part of India's growth story.
So that leaves us with one big question. With all these reforms, is India setting the stage for a golden decade of NRI investment? As these barriers keep coming down, it really feels like we might be on the cusp of an unprecedented new era of investment from the global Indian diaspora. Something to think about. Thanks for tuning in.